Hi to everyone guys and welcome back. In this new video, this is a very important week for risk-on markets. There will be a CPI numbers in the Eurozone, but most importantly, there will be the FOMC in the US zone. On Wednesday, in this event, there will be a decision of the new interest rate by the Federal Reserve, and Jerome Powell will also speak, helping us understand how the Fed intends to behave regarding future rate hikes. Before diving into all details, I ask you, as always, to support the channel by leaving a like and subscribe to the channel itself. Have you done that? Perfect, let's start.
We start immediately with the news of fundamental importance, but above all, the data that will come out during this week. So first of all, let's start with the fact that from today, there won't be anything significant that could move the market, at least from a fundamental point of view. Tomorrow, there will be CPI numbers for the European Central Bank, for which we currently have a previous figure of 5.3% and a forecast of 5.3%. This means that we expect a stable CPI figure compared to past data. But guys, be careful because this week is going to be very hot. For those who don't know, it's a session that happens almost every month regarding the American Central Bank, the Federal Reserve, which in this case decides interest rates to combat inflation. In fact, as you can see on Wednesday, there will be the Fed interest rate decision, which most analysts expect to result in stable rates, but we'll look at it shortly with more detailed data. As for this type of information, the more important data is that there will be a press conference 30 minutes after the release of interest rate data at 8:30 p.m. Specifically, there will be the FOMC press conference where Jerome Powell will speak, and from there, we can understand the projection that the Reserve has in terms of monetary policy. Let's see what the market expects. Obviously, we can see that 98% of the market analysts expect rate stability, with a range of 525-550, which is the current data. Practically everyone expects rate stability. Only 2% expect a 25 basis point increase. How could the market react? If the Fed keeps rates stable, we could likely see a slight short-term pump in very low time frames. This means 1 minute, 5 minutes. Immediately after, there would be a reabsorption of the pump. In general, there is a brief euphoria that is quickly absorbed. We can understand that the market already expects this kind of data. If a 25 basis point increase were to come out, the markets with a risk-on sentiment could correct significantly because nobody expects an increase in interest rates. We know very well how much damage it can do, both to risk-on markets and to the entire economy, especially the American economy. As for the Eurozone, we can see that the new president of the Bank of Italy, Fabio Panetta, given his recent public statements, does not like stablecoins very much. He said that both Tether and PIUSD are nothing more than instruments that could be a possible obstacle to the launch of a CBDC related to the euro. We know very well how many criticisms a euro CBDC could have, mainly regarding privacy concerns. Many would want CBDCs to have the same level of privacy as cash, although in my view that's quite unfeasible. Anyway guys, be careful because if it were to be implemented in the long term in the Eurozone, it could significantly change the game for stablecoins, especially those pegged to the dollar and cryptocurrencies in general. This analysis, reported by Bloomberg, is interesting. We can see that in 2022, the previous year, Formula One teams that had approved and had sponsorships related to the world of cryptocurrencies were 16 sponsors. The situation for 2023 has changed completely. Sponsors like Velas, which was an official sponsor of Ferrari, Phantom, and Tezos for Red Bull have dropped out, but for McLaren we still have them. FTX remains for Mercedes, but it seems normal that it dropped out for others. Anyway, for 2023, in terms of sponsors in the world of cryptocurrencies, it hasn't been the most promising year. We'll have to see what happens in 2024 or 2025 when a new bull run could hypothetically occur. I wanted to briefly consider this on-chain graphic that uses the stock-to-flow model for Bitcoin. It's interesting because it shows how many days we are graphically away from the halving. We are currently in the last part of the halving. When we get to the purple zone, we are practically at the halving. Currently, if I'm not mistaken, we are about 200 days away from the halving, and consequently, we have already covered this much ground. Many believe that this could be one of the most important halvings for Bitcoin according to various metrics, not necessarily the most effective in terms of reward halving, but one that could make Bitcoin scarcer than physical gold. In fact, Bitcoin could become scarcer than physical gold after this halving. All right, let's start by looking at how the market is behaving at the moment. We have a relatively mixed market. RBL is down 8%, KAS is up 4.9%, Link is up 5.7%. In general, there isn't a precise trend. Although, as you can see, except for some like RBL, which is down 8%, we don't have any significant movements. Let's take a look at Bitcoin and Ethereum. They are basically not moving. Over the weekend, in the last 24 hours, Bitcoin reached a low of 26,620 and Ethereum is at 1,230. In general, even in the top 10, there aren't significant fluctuations. So this is the situation. It seems that the market is waiting for a fundamental event, which could be the FOMC, to establish a direction. The situation remains the same. I expect a possible liquidity grab below $24,600 to potentially take a direction. Of course, this is just a hypothesis, and if we were to reach the 25,720 threshold, I would evaluate whether to go long in this range. The entire zone from $24,000 to even $24,400 PD4, depending on how the demand for Bitcoin presents itself. Now let's look at the open interest. It's slightly up in the last few hours, going from 7.89 billion to 8 billion. I expect an increase in open interest over the next 2 days, today and tomorrow, and especially before Wednesday, just before the FOMC, in case there are conflicting data from this latest session. The whole world awaits Powell's words. Let's check the liquidation heat map. We have a strong liquidation wall right around $26,188, while for short liquidations, they are found at $26,236. So we'll see which of these levels Bitcoin touches first.
Perfect. In this video, we have seen the latest news in the crypto market. If you haven't already done, I ask you to support the channel by leaving a like and subscribe to the channel. For the subscriber, we will see you in the next video. Bye.